But it all has consequences, and I think we are starting to see the consequences.
With growing uncertainty in the United States real estate market, we are undoubtedly entering perilous times. The real estate market was one of the safest investment options for people around the world. However, the situation may change in the coming months. We will discuss in this video why Warren Buffett and others think we are on the verge of a period of change. Let's start things off with a look at why Buffett and others are so worried. Make sure to watch the whole video if you want to be prepared if the storm hits the US real estate market. Overvaluation.
And, how do they decide how much a building like this is worth? And the answer is, it's whatever they can borrow without signing their name.
The first reason is the problem of overvaluation. Buffett believes that some real estate market segments, mainly in the residential sector, are overvalued. One of the impacts of overvaluation is the sudden drop in home value. Homeowners, who have often invested their life savings into their properties, find themselves underwater, owing more on their mortgages than their homes are worth. As a result, many families face foreclosures or bankruptcy, leading to significant distress and upheaval in their lives. Interestingly, the effect of overvaluation in the real estate market is not limited to the sector alone. It also affects the economy as consumer spending dwindles. Furthermore, the real estate sector plays a role in the financial industry, with banks heavily invested in mortgage loans. A downturn in the market can trigger a cascade of bad loans, disrupting the stability of financial institutions. Most investors fall victim to overvaluation because they don't seek value. Overall, overvaluation is one of the factors that will facilitate the impending storm in the real estate market. Shocking debt levels.
We are starting to see the consequences of people who could borrow at 2.5% and find out it doesn't work at current rates, and they hand it back to somebody.
Debt accumulation in the real estate sector is another concern for Buffett. When borrowers have excessive debt, they become vulnerable to market downturns, economic shocks, or changes in interest rates. If many borrowers struggle to repay their debts, it could lead to widespread financial instability. One of the effects of debt accumulation in the real estate market is the influence on mortgage rates. When debt levels rise, it puts upward pressure on interest rates. This occurs due to the increased risk perceived by lenders, as higher debts result in a greater probability of default. Consequently, potential buyers may face higher borrowing costs, causing a decrease in demand for real estate. High debt levels can also have an impact on property values. As potential buyers face challenges in securing financing, the demand for housing decreases. With fewer buyers, sellers may experience longer listing periods and lower their asking prices to attract buyers. This trend can cause downward pressure on property values, affecting the overall stability and growth of the real estate market. Excessive risk-taking.
We will not run big risks at Berkshire. Now, we will be willing to lose, as I put in the annual report, $6 billion in a given catastrophe.
The Oracle of Omaha believes that excessive risk-taking, fueled by people's willingness to ignore fundamental real estate investing principles, is another trigger for this incoming storm. The renowned investor suggests that the get-rich-quick mentality, where individuals are willing to gamble rather than focus on building sustainable long-term wealth, is hurting the sector. Examples of such behavior include flipping properties, over-leveraging, and neglecting cash flow. Buffett once said, "To navigate the real estate market successfully, it's vital to assess risk accurately and exercise patience. Rushing into investments without due diligence is like sailing into a storm unprepared." Heeding Buffett's warning may help you avoid financial distress by neglecting crucial aspects of real estate, such as maintenance, changing market conditions, and other ongoing expenses. However, he wants investors to understand that bubbles and storms have been part of the economic cycle throughout history. How the storm arose.
I like to say it's a hurricane over real estate right now. We're in the Category 5 hurricane, and it's sort of a black cloud hovering over the entire industry until we get some relief.
The origin of the current real estate market woes stems from long ago. The main cause of the issue comes from cheap debt's pervasive influence. In a little over 10 years, the United States real estate market has been underpinned by a storm of cheap debt. Information provided by reports from the Federal Fund's effective rate chart shows prolonged times of historically low interest rates. The enticing rates caused investors to leverage their property buying unusually. Interestingly, Warren Buffett is not the only one who thinks a storm of problems is coming to the real estate market in the United States. Real estate billionaire Barry Sternlicht also thinks the storm is unavoidable. In a recent interview with Bloomberg, he maintained that the Federal Reserve's aggressive monetary tightening is the main cause of this impending storm, pointing to higher rates and tighter monetary restrictions as a springboard for trouble for the real estate sector. There is around $1.5 trillion of retail real estate debt that is set to mature over the next 3 years, which could lead to a series of bankruptcies as rates remain high and property values depreciate. We know that debts pose a challenge to homebuyers, especially through credit cards and loans, reducing the purchasing power of individuals. With a large portion of their income allocated to debt repayments, potential homeowners will find it increasingly difficult to save for down payments or qualify for a mortgage. The consequence of this scenario is reduced demand and slower growth in the real estate sector. While Buffett's predictions are not always accurate, he bases his concerns on many years of experience and expertise in investing. He also highlights the various factors that possibly contributed to the impending storm. If you liked this video, subscribe and hit the notification icon for more updates. Thanks for watching!